Welcome to Buy Now, Sell Now Weekend. I'm Mubina Kabasi.
Hi everyone, I'm Avan Dabash. Let's take it straight then to what's lined up today on the show. Over the next 30 minutes, we will be discussing all of your stock queries. So we'll be starting off with queries on GNFC as well as Tata Metaliks.
And in our portfolio segment, we'll be discussing Rama Iyer's portfolio.
And we've got our guests lined up. Vikas Sethi, MD, Sethi Finmart is with us to help us out on the fundamentals. Joining in on the technicals, Kunal, Saraogi, CEO, EquityRush.com. Thanks so much for joining in. We have our video queries and our questions all lined up. First up, their email queries from Arjun, who sent in his question from Mysore. He's got 250 shares of GNFC at an average price of 210. He wants to know what to do. It's a fairly short-term time horizon for the next 1 to 3 months. So let's get straight to it then and get in a perspective on the fundamental side then. Vikas, GNFC, what do you think that he should do given that the stock is currently trading at about 200? If you look at the long-term charts as well, it seems like most of the fertilizer companies haven't really been doing a whole lot. Do you think that it would be prudent to stay invested, or given that it's a short time frame exit?
Avan, I feel GNFC is a fundamentally good company. The stock was doing pretty well until a month back before there were reports of a gas leak in its Dahej plant, after which the stock corrected from 300 odd to the current levels of around 200. I think the investor has bought it at the right price, and since his time horizon is 3 months, I would request or I would recommend that he increases his time horizon and stays put with the stock for about a year, when I think we could see levels of 300 rupees on the stock, because I feel the company is doing well. Their products, the prices of their finished products have gone up recently, and the benefits of which would start accruing in from the next few quarters when their Dahej plant starts functioning.
Oh yes, all eyes will be out on when the Dahej plant, which recently was under some problems, will start functioning. Watch out for targets of 300. That's Vikas's call. But let's get in a technical perspective then on GNFC, and that's some of the recent short-term charts that are on your screens. As you can see in the last week, just I think in line with the way markets have moved, GNFC as well has gone down by about 3 months. And if you just take a 1 month perspective, it's been a one-way move downwards for this stock, 22% lower, mostly hammered down because of certain events taking place at the Dahej plant. So Kunal, come in on the technicals. Where do you see GNFC playing out?
It's absolutely right that in the short term the stock did actually correct, but if you look at its overall trend, I see no real threat to the trend. It's had a very robust uptrend for a while now, and I see that continuing going forward. So I would advise the investor to continue to hold. I think a good place to put a stop loss if you're a short-term trader with a 3-month horizon would be close to around 200. So somewhere close to that, put a stop loss. I expect for the stock to get to 250, 260 in that period.
Okay, there you have it. That's the cue coming in on GNFC. On the technicals and the fundamentals, it gets a thumbs up. Watch out for a target of 260 according to Kunal. Arjun has got another query, and well, this one comes in on Tata Metaliks. So he's bought the shares at an average price of 342, is close to 165 shares. Now wants to know the outlook. Yet again, it's a very short-term time frame of the next 1 to 3 months. Now, any of the Tata Group stocks as of now have definitely been in the spotlight with respect to the very public and very bitter boardroom battle between Cyrus Mistry and the Tata Group and Tata Sons as well. So let's find out what exactly should be the outlook. Vikas, does the perspective change? Because, if you look at the entire group of Tata Group stocks, ever since Cyrus Mistry took over, if I'm not mistaken, Tata Metaliks is the one that hasn't done all too badly. Although the long-term charts are reflecting that it's been through quite a bit of pain, currently trading at about 312 thereabouts. Does the perception now change for the short term given all that's been going on?
No, again, Avan, what I would say is this company is also good. It's a metal company, small-sized company from the Tata Group. Metal stocks are doing well, and I think this company also would continue to do well. But since there are problems with the Tata Group, we might see some pressure for a short period of time. But if the investor is willing to hold on for a longer period of time, I think he need not worry, and I think he would see his price. He's sitting on small losses which could be recovered, and he could make substantial gains also if he stays invested in the stock from say 9 to 12 months perspective, when I have a target of around 400 rupees on the stock.
Okay, the short term may see some pressure coming in for this stock, but in a 9 to 12 months horizon, Vikas has a target of 400 rupees. Of course, do remember that Tata Metaliks were actually proposing a merger with Tata Steel, though of course ever since that has been called off, there has been a good amount of rally that we have seen in Tata Metaliks. It jumped to about 400-500 rupee levels at the beginning of the year, but of course since then it has slipped off considerably due to a number of factors. Kunal, come in then on the charts. What are the levels that you're mapping out for Tata Metaliks?
See, I would largely concur with Vikas's view on this. I think the stock has had a huge surge and now it's corrected, but the overall trend remains positive. Metals across the board are doing well, and I think that this stock too can get to 390-400 levels for sure. The technicals definitely point towards more upside. One should put a stop loss around 342. And around 300 rupees, and that I think is the optimum place to put a stop loss. With that as your stop loss, you could ride the trend. I expect for the stock to get to 390-400 too.
Okay, that's the view coming in. So talking about how this is a stock that can be held in the portfolio may see a little bit of an aberration in the short term, but nonetheless, it's a stock that both our experts say should be held onto. I hope we helped you out with both of your stock queries. Time to take a short break. On the other side, Rama Iyer's portfolio, that's what we'll be discussing with Vikas Sethi.
Welcome back. Thanks for staying on with us. This is BNSN Weekend.
Well, we've got our portfolio advisor segment as promised, so let's get straight to it. Well, today, Rama Iyer has sent in the portfolio, 41 years of age, employed, with a time horizon of the next 2 to 3 years. Fairly long-term time horizon, so let's find out what's in the portfolio. First up, Minda Industries bought at 345 rupees. Inox Leisure, 43 shares purchased at 273. To banking then, and ICICI Bank bought at 318. Moving on, it's definitely peppered with large and mid-cap stocks, so GHCL features on the list at 295. Bought Karur Vysya Bank at a whopping price of 473, clearly bleeding on that investment of about 10 shares. Power Grid, 172 is the buy price, the only stock on which money is being made at 100, close to 100 shares rather. Moving right on then, V-Guard Industries, there's 100 odd shares at 181, that's the buy price. Granules India has been picked up for 500 shares at 117. Then there's Nagarjuna Oil just at about 5.8 rupees. So let's find out how exactly to make sure that this portfolio has enough chops and changes to ensure that some money is made here. Vikas, I'm going to start off by looking at the first three stocks a little closely, because there is diversification, there is a mix of large and mid caps, but unfortunately the buy point is very steep for most of them. Minda Industries, what's the outlook here? Does Inox excite you within the media space, and what's the outlook on a heavyweight like ICICI Bank?
Yeah, as far as Minda Industries is concerned, it's an auto component company. The company has been doing well. The stock has also done well, but over the past few days or say past few weeks, in the correction in the markets, the stock has also corrected. The investor is sitting on losses, but I think he should continue to hold on to this stock, and I have a target of around 400 rupees on the stock in a year. The other stock is Inox Laser, again a play on India's consumption story. Although this sector is also reeling under the pressure of demonetization, which was announced recently by the government, but I feel things would become stable in the say coming months, after a month or so. So I feel there's no need to worry as far as Inox Laser is also concerned, and I think he can continue to hold on to Inox Laser also. And as far as ICICI Bank is concerned, very good private sector bank. The stock had recently touched a high of around 290 rupees. although the investor has bought it at a pretty high level and it's sitting on substantial losses, but I think since he's willing to hold on to this stock from a long-term point of view, he need not worry, and ICICI Bank would do well because the two major groups where this bank has exposure, namely the SR group and the JP group, both have been able to monetize some of their assets, so which would reduce the pressure on ICICI Bank and would improve their asset quality in the coming say quarters or years. So I continue to remain bullish on ICICI Bank from the private sector banking space because it trades at a significant discount to its larger peers, to its peers actually. So I would recommend a hold even on ICICI Bank.
Okay, all three are whole calls from Vikas. Minda Industry, his target is 400. Inox Leisure, while of course there is that overhang of demonetization, nevertheless he believes the consumption story is still strong. And ICICI Bank, you just heard Vikas, he says that it is still trading at a bit of a discount compared to some of its peers, and nevertheless two of its large accounts have finally been able to demonetize some of their assets to pay off the loans. Moving on, the next three stocks in his portfolio are GHCL, bought at 295 rupees, where he is losing some bit of money over there. Karur Vysya Bank, that one is a big pain point for him because he bought it at 473 and currently it's languishing at 81 rupee levels. So it's almost about 80% of his market, of his wealth that has been eroded in that stock. And lastly, Power Grid, bought at 172 and currently at 183. Vikas, what's your take on these three stocks?
Yeah, as far as GHCL is concerned, fundamentally a good company. The stock had also run up because the prices of its finished product like caustic soda had gone up recently. So it was a major beneficiary of the same, and it reported a pretty good set of numbers for the September quarter. But in line with the correction in the markets, the stock is corrected. But I think he could continue to hold on to the stock, and he would get substantial returns from this stock. The other stock which he has is Karur Vysya Bank. I think his acquisition price of 473, he may not have factored in the split shares which he has got. The stock was split in the month of February in the ratio of 5:1. So that would, I think, bring down his cost to around 95 rupees. So it's sitting on small losses, but then I would recommend that he books his losses and shifts to a federal bank from the private sector banking space, which looks better and which could relatively outperform. So my advice would be to switch to a federal bank where I have a target of 110 rupees. And the other stock which he has is Power Grid. So Power Grid, he has bought it at the right levels. It's sitting on profits. The company is doing well, and I think it would continue to do well. My target in a year's time would be 250 rupees on the stock. So I would recommend a hold.
All right, that's the view coming in on what you should do with the next set of stocks. A chop and a change really coming in. Let's move right on to the last set then, and V-Guard at 181. What do you think you should do here? Granules India, do you think that it's a good stock to have? And literally a penny stock in the form of Nagarjuna Oil.
Yeah, as far as V-Guard is concerned, very good stock. It's created a lot of wealth over the past few years, and I think the company would continue to perform. So I would recommend a hold on V-Guard. I have a target of 225 rupees on V-Guard in a year. The other stock which he has is Granules India. I'm pretty bullish on this stock. I would discuss in details about this stock when I talk about my wealth creation idea. So this stock looks good, and I have a target of 175 rupees on the stock. And the final stock which he owns, which is a penny stock like Nagarjuna Oil, I would recommend that he books his losses and gets out of the stock. And I would recommend a switch to a company like Praj Industries, which I think after the recent production cut announced by OPEC, a company like Praj Industries would stand to benefit immensely because now the blending of ethanol would come into focus, and a lot of ethanol plants would be set up, and this being the only manufacturer of ethanol plants in India would stand to benefit immensely. So I would recommend that he switches his investments to Praj Industries, where I have a target of 120 rupees from the current levels of around 80.
All right, that's of course the call coming in. V-Guard as a whole, Granules India as well, positive outlook over there. But you may actually move out of Nagarjuna Oil Refinery and replace it with Praj Industries, targets of 120 rupees. But do remember that this portfolio recommended here is a model portfolio, and please do consult your individual investment advisor before taking any investment decisions. Let's slip into a short break, but after that, we will be joined by our technical as well as fundamental guests to give you their view on the markets.
Thanks for staying on with us. This is Buy Now, Sell Now, and it's been a pretty volatile week for the equity markets. After all the give and take and the roller coaster ride, sub 8100 is how we shut shop for the week. In fact, let's get in a technical take then. And Kunal, do you think that the undertone of the market continues to remain bearish and we've just had a few surprise days on the upside, or are you by and large going long?
See, I think that of course all eyes on the credit policy and how that pans out, but I think the overall trajectory for the markets remains bearish, and I expect more downside in the short term at least. The major levels for the Nifty I think are close to about 8,000. That I think is very critical, and if we close below 8,000, I wouldn't be surprised if we actually end up close to 7750. So my overall direction on the markets remains bearish.
Okay, a bearish call really coming in from Kunal on the benchmark indices. But let's also focus in on some individual ideas there. And Kunal, take us through what exactly would you recommend for a short-term basis?
From a short-term perspective, a stock that I like from a buying perspective is NHPC. The stock has outperformed the markets, and I think that all power stocks are beginning to look up. And this one in particular can be bought with a target of 30 rupees with a stop loss at 27. And I'd go short on Bharat Financial Inclusion. I see all NBFCs going down in the week following. And I think the stock can be sold short with a target of 675 and with a stop loss at 720.
There you have it, some trades to look out for based on the chart patterns. Vikas, what about you? Where is it that you'd be placing your bets?
Yeah, well, my idea would be to invest from a long-term point of view. So my long-term ideas would be, the first idea would be Cosmo Films. This company is a leading manufacturer of packaging and lamination films which are used for several packaging solutions. This company is an innovator in BOPP packaging. The company did pretty well over the past few quarters, and I think they would continue to do well in the coming quarters. I see a lot of pretty strong growth in the use of packaging products because of the increasing organized retail chains, and then the increasing penetration of e-commerce, and also the recovery in the rural economy post the good monsoon which we have had. So that would all lead to an improved performance from this company. And to add to that, the company's US business is also doing well, and they've also recently undertaken a capacity expansion, the benefits of which would also accrue in the coming years. So I'm bullish on the stock, and as far as their financials are concerned, the company enjoys a pretty healthy balance sheet with low debt equity ratio, with high margins and high return ratios. So I remain bullish on the stock. The stock is corrected from its recent highs. So I think one would do well to invest into the stock at the current levels, and my target in a year's time would be 575 rupees on the stock. The second idea would be Granules India. It's a mid-sized pharma company which is present across the entire manufacturing value chain. This company is a preferred integrated supplier to several MNC pharma companies. The company has also been doing well over the past few years, and I see continued improved performance from the company. There was recently US FDA inspection of its Hyderabad plant, and that was completed without any observation, which was again a positive. I expect this company to continue to grow at a CAGR of 25% on both revenues and net profits over the next 3 to 4 years. The quality of the balance sheet is pretty strong. So I'm bullish on the stock, and I think on Friday also, despite the markets being weak, the stock was doing well. So which shows that over the short term also the stock would do well. So I think one would do well to buy into the stock at the current levels, and my target in a year's time would be 175 rupees on the stock.
Okay, Cosmo Films as well as mid-sized pharma company Granules India are two stocks that Vikas Sethi has identified. But Kunal as well as Vikas, thanks so much then for joining us on Buy Now Sell Now weekend with your fundamental as well as technical perspective. And with that, we're completely out of time on this show. Thanks for watching and have a lovely weekend.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.